All right, traders, especially if you're a day trader, you need to get prepared for the next trading day. So what I'm going to share with you today is just going through a process of getting prepared. And we're going to be looking at the spiders and the Qs and the futures. But if you're trading stocks as a day trader, until you become acclimated at just having your process down, right, step after step, where you can just look at any given chart where somebody might throw out a symbol and you know exactly the things to look at. And in the moment, maybe you can't set up everything to prepare because in the moment it's about placing the trade. But if we're going to know what we're going to trade, whether it's spiders, Qs, E-minis, Apple Computer, we can get prepared the prior trading day with support, resistance, multiple time frames. And I made a little list here. I'll share with you. So we need a big picture bias. Right? What's happening in higher time frames? We're going to look at trends in multiple time frames. Look at whole numbers. What is whole numbers? Well, you can see the chart behind you. I've got some whole numbers marked off on SPX. I want to know if it's at 6,700 or possibly 6,800 or above or below. Open gaps. That's where there's going to be a change. Buyers and sellers will be focused there. Open gaps. Major moving averages for the markets. Where's the 50 MA? Is it above? Is it below? Is it close to where current prices are at? Possibly the 200. Markets could be trending down in a bear market environment, coming down to the 200 MA on the SPX. You'd want to know where that is. Or coming up. Large open interest. Oh, what does that mean? What do options have to do with trading these? Well, what we do intraday is take note of where there's large open interest in SPX, in the Qs. Is there a large open interest at a whole number? It's going to be a major inflection point. Now, what's the trend? How did it get to that number? Was it a climactic move? Did it move down there slowly? Is it coming up to it? All of that has to be viewed in real time, but being prepared gets you ready versus maybe scrambling in the moment as to what you're going to do. Major and minor support on multiple time frames. And I've got the daily 65-minute and the 5-minute. Advancers minus decliners in intraday. How strong or how weak is that market? And is that changing? So as I can look at the indices to see that advanced decline number tells me from a broad market perspective how the markets are doing. And I like to use the analogy under the hood. What's going on there? Well, I could look at the S&P and see that they're doing well. Is it a broad market move up? And where is it moving up? Or if it's moving down, where did that move start from? And set alerts. You can't watch everything, so set alerts. Let the computer watch it for you. So let's move this over here and go through part of that process. So SPX, you can't trade this, but everybody's watching it. So I want to be aware of significant numbers in the SPX and high open interest. Right now, there's a large open interest in puts and calls at 6,700. What that would suggest is that if it moves far away from there, it's going to get pulled back. That's often what happens. Now, measure what's far away. Well, the next whole number, an area of support where it might look like things have gotten really nasty to the downside or super bullish on the upside, and that would make you believe it's going to keep going. Well, it might, but we follow the trend. But we know that big open interest number tends to be a magnet. Another thing that we look at in the green room intraday is where's the high volume strikes in SPX during the trading day. They have a tendency to go there. So where's the big open interest? Where's the big volume? What are traders buying that they're anticipating that it's going to go there? When it's below that number and they're buying a strike above, that means that strike is going to be cheaper because it's out of the money. Now, what makes me think that they're going to be right? Well, big money's doing that too, and they're anticipating that's where it's going to go. And many days it goes there, especially if it's trending. And of course, we look to the left to see if it's lined up with support or resistance. And the same thing on the downside. This is what we call factory work. So let's take a look at that. So here's the S&P 500. This call strike and put strike is something that we look at every day to see where the extremes are. And while I can't give you a statistical spreadsheet on that, I just know from experience, I'm guessing between 95 and 98% of the time, it never goes to those levels intraday. Pretty good odds that it's not going to get there. So this was from Friday, and you can see even with that big move, it didn't get there. These numbers can adjust quite rapidly pre-market, and during the trading day, the premiums in these options can change very fast. But starting out with what's the extreme is extremely helpful, very helpful. So daily chart, what's the trend? This isn't an uptrend. It's got a rising 20. It's got a rising 50. I look to the left. Where's minor support? Where's major support? Right? Major and minor significant reference points on the daily time frame. Right? I got my whole numbers marked off. I'm going to put one at 6,600. I'm going to put one at 6,800. Prices came down quite rapidly, and they came down into this area on Friday, and a rising 50 MA. That suggested to me buyers were going to step up in that area. Now, we look at our 65-minute chart. I'm going to look at this in some other markets, but you can see where I put my cursor right there on what I call a poke bar. It's not a pivot. Right? Pivots have 3 higher lows to the left and right, low pivots, and high pivots have 3 lower highs to the left and right. And your software can mark that for you. And I see here, this little reference point right there, you needed to be aware of that as prices were coming down into this area on Friday. And the 50 MA, it pushed below the 50 MA, which initially, of course, is bearish because institutions are focused on that 50 MA, and they're going to try and defend it the first time it comes down there. And they did, and it pushed it right back up. And so we can see on the 65-minute chart and these little blue areas there, you can't see anything because this is SPX, but when we look at some of the other indices, you'll see how there's trading there. So this is what's happening overnight. So as it comes down there, you're getting prepared. You have an alert down there in this area. Actually, you'd be setting it right here. And often what's helpful to do is to use a region. And so you can mark it off like this and say, in that area is where prices should turn. And what most platforms could do is when you do that, if you open up your platform, you can say, hey, you know what? Put that on all my charts. So when you go to your intraday chart, it's already going to be there. But you start with the higher time frames to mark it off. And you could do the same thing with the whole numbers, set alerts, put them on other time frames. So let's go and look at SPY now. I'm going to apply the same thing. And so here is the marked off level. You can see it's right there. So I don't even need to look over here on my 65-minute chart. I'm prepared for that. So as it comes down here, that little area that I've put, I know intraday when it gets down there, if it gets down there, this is where buyers are going to be. So I don't even need to look at this anymore. I marked this area off for Monday to be aware of this pivot high up here. You can see pre-market or after hours, I should say, this started inching up toward that level. So it moved from here to here, which is positive, meaning the depth of retracement was positive. Now, when it gets there, I know there's going to be sellers there. Now I'm observing how do buyers react to that reference point where the sellers are. Do they push it up above and it spikes right back down again? Like a little breakout failure, pushing above that area and coming back down. Does it go sideways for a half hour, an hour, and it can't get pushed back up? And maybe it starts breaking down where I'd want to short it, or does it go sideways for the same half hour to an hour, holding there? And I would apply bar by bar analysis, say, does it form bottoming tail bars? That would communicate to me every time it dips down, there are buyers' demand down below and they push it back up again. That would lead me to believe that a breakout would occur and prices come up to the next level up here, that 680 level, where the other pivots are. So what we could do, right, is just reproduce that and put it up there. So now it's up in this area, and we're getting prepared if it can't handle this resistance and goes back down. Well, I'm focused on the same level. But if it goes sideways and forms bullish price action and it breaks out, my bias is it could go up here. That's where the next level of sellers are going to be. Don't need any fib lines, trend lines, VWAPs, Ichikumi clouds. All you need to do is look to the left. It's on your charts. So we're being aware of that. Before we go on to the next chart, here's your advancers minus decliners. And you want to see how bearish or how bullish the day is, or is it more neutral? Now, with the numbers, you can see I've got numbers at 1,500, minus 1,500, 1,000, 1,000, and 2,000. Really bearish day, down minus 2,000. Maybe it's climactic, especially if it was trending all day. You see, on this day where it came down, it started bottoming out at 1,000. It came up, and it does form patterns. I'm not too interested in patterns, but I am interested in where it made turns, support and resistance, and here it started trending up from a negative number, yet the markets rallied strongly. So while numbers, right, the levels are important, the trend is even more important, in which way is it going. But what if we had a day where the market was trending up and it started from, say, plus 500 and it was trending up to a plus 2,000? That would be super bullish and would strongly suggest it could continue maybe for the next day or two. So there are different pieces of information that we can gain from how this trends and from what level. Now let's look at the cues. And I'm always going to look at the underlying. I want to know where the underlying support and resistance is at, like spiders, Qs, SPX, IWM. You want to know the underlying because that's where more people, let's say the world, is focused on those major market indices. Futures traders are going to focus on futures and that overnight data, but the significant information is truly on what I call the day chart. So here's the cues. Again, the blue area is the overnight trading. The overnight trading is going to have lower volume. Fewer people trading there. Common sense. During the trading day, more people are trading. More common sense. So here was the same situation. Prices came down to support. They broke under the 50 MA. It was like, oh my goodness, it went through the 50. So that was a focal point, but it poked down through it before the rally began. And so it was the same situation. We're going to get ready for the next day. I've got that already up there. And I want to put this here to be ready for Monday. Now, because this came up from this low level and it went straight up, it's extended a little bit. It's strong, but extended. So if it gaps up on Monday into this resistance area, I think it's a reasonable expectation that longs would sell because it moved. If they bought down here anywhere on the way up and it gaps up and they got an additional profit, right, it makes sense that it would sell. That's the psychology of what's happening on the chart. What are people thinking? So 5-minute chart, this continued to go up after the close. But down here is where you want to focus. Right? This was a good day where prices had gotten extended. And they moved down into the little green area that we had looked to the left and marked off. And now it popped up. Here's your just typical buying in the pullback type of a pattern. This one communicated a little dip into minor support. Buyers stepped up and they pushed it up. This is what we call bullish price action. Why? Red bar ignored, sideways at resistance, and it continues to go up. Now, when it gets up here, odds are it's going to stall. Again, you're looking to the left. So, same process, SPX, SPY, QQQ. Same thing. We could look at the Dow. That doesn't trade as actively pre-market, but the process is the same. And you can see it's the same areas. I don't have to mark them off for you. You're getting the idea. Now, this didn't go down to the 50, so it showed some relative strength by not going down there. So can it go back up? Now, let's look at this chart. Let's get rid of the overnight trading for a second. Now, based on Friday's price action, it's reasonable. Now, I like to use that word reasonable because there aren't any absolutes. As professional traders, we're odds players. So it's reasonable for me to think that there could be follow through to Friday's rally day and move up. But move up to where? Resistance areas that we already looked at. The 65-minute is in a downtrend. So during this time, sellers have had control, and moving up to resistance within a downtrend increases the probability that sellers would set up more aggressively, because who was buying up here and here and here and here? Now they have a chance to possibly get their money back. More of that psychology behind the thought process of chart patterns. They reflect to us what other people are doing with their money. So, and we look at the other indices in the same way to see they're in downtrends. Right? So look at the spiders. There you go. Downtrend, filling the gap, coming up to resistance. Odds are they're going to be sellers there. That's what traders do. They sell resistance in a downtrend and they buy support when it's extended, or they buy support in an uptrend. Now, this is an uptrend. This is a downtrend. They're not in alignment, which often leads to some choppy price action. What could happen as we go into this new trading week is this comes up into this resistance. Maybe it gets pushed down, or it rallies around, it goes sideways. Look, none of us know what it's going to do in the future, but we look at this from probabilities. And I know if it goes sideways at resistance, tells me that buyers continue to step up and it's likely to go higher to the next level. If it gaps up and it craps out and starts diving down, something's changed, but it's in alignment with this downtrend. Maybe it forms a double bottom down here, which sets up a new opportunity. Again, we are preparing, and we would prepare in the same way with IWM. Sometimes one is weaker or stronger than the other. So in the green room, sometimes we trade the Russell, other times we'll trade the NQs or the leveraged Qs. Sometimes the spiders or the ES is the better contract, or the Dow. So we're looking for which one of those has time frames aligned, support, resistance. The more things that are aligned, the greater the probability, and of course, the idea of a tradable void. Where is there a void of resistance or support, or is it directly to the left where buyers and sellers are going to be? So IWM, it's broken down, right? This is not in an uptrend. It's in a sideways trend because it broke down under this support level. It had a good day on Friday. And where's resistance? This actually, it's at this resistance right here. So the same process. Does it go sideways? Let's see where it is overnight. So buyers continue to step up after the close. What does that tell you they're thinking? It's going up. Now, what if it goes down? What if it gaps down Monday for whatever reason? You've got traders that are caught. And that is going to make me believe that they're going to continue to sell. But I need more evidence of my beliefs, which are going to be created for me on the chart. Each bar, each pivot is going to tell me what's going on. And at some point, I'm going to have greater confidence that prices are either going to move up or down based on the new price action that occurs in the moment. That's what we're doing. We're taking the past, we're putting it into a structure or formation that guides us as to support resistance trends. Are they in alignment in multiple time frames? And we're putting that all together to create a trading plan for the next day. So this is the process, and I have to mark off my charts. That's what I'll do. And I have it on another system already prepared for Monday. This is what I share pre-market. So pre-market, you can check it out. So now we would go to the futures and start doing the same thing. Right? Where was support? So this was initially where the support was, and it went further down. Now, that's not aligned with anything. And this is why you need to look at SPX, SPY, Qs, and so on, because this is relevant. It's more relevant to look at the underlying and see where that support and resistance is to be prepared. So prices dipped down aggressively. They got down to that area and the same pattern. They began to push up and they rallied up that time. The Qs came down into that area, poked down below a little bit, and it begins the process of forming patterns. So patterns are patterns. They reoccur over and over again. And so as you know the patterns, and we don't have to call them, candle patterns of, dark cloud covers and so on, or if they're head and shoulder bottoms and pullbacks or flags, you learn that basic stuff and then you just recognize it as it's happening on the chart as to, hey, that was a dip and it came down to minor support and it came back up and it's bullish price action. It's likely to go up. And from there, you place a trade and you see, where would I be wrong? You share size it accordingly. Money management is really, really important, of course, because without that, you don't have a chance. But same process, multiple time frames. I just hit, copy, paste, and bring it down here. So if the futures, right, the NQs continue to push up into this area, and that's overnight trading, lower volume, but the white area is what happened during the trading day. So this is going to be a significant area, and this is where it initially failed. This was only overnight trading, the blue area, whereas there was nothing to the left in the white area. So the white areas, you make colors whatever you want, the white areas are going to be more significant as a reference point. On this particular day, prices came up into their pre-market, and at the open, it got sold into and it collapsed. And here it held a little while, for a little while. Anyway, you get the idea. Once you have the plan, I'll just drag this over again. There's the points of what you need to look at, and you start setting alerts and you have your areas marked off. You're getting prepared for the next trading day. Now, if you were going to trade whatever, it doesn't matter what you're going to trade. You could say, you know what, Greg, what if I want to trade gold? Well, this is, it's going to affect the underlying, of course, because, again, this is a commodity. But you'd look at GLD. It's going to have gaps in there. But maybe a better example would to say, what if you want to trade NVIDIA? Right? You just want to trade an equity. Well, you do the same thing. The same darn thing. Look to the left. Get your drawing tool out. Get your region. And it's in an area where it bounced from before, coming all the way down there, and you go ahead, you know what, I go into here, and I say, you know what, because I've already prepared this, I don't like that yellow color. Make it green for me, please. And now it's green. And you know what I forgot to do? I didn't say, well, yeah, that's how I set an alert. But what we want to do is, in here, and I already have it, put it on all charts. It defaulted to that. And we have to do the same thing over here for resistance that it's coming up into. So if you were going to trade NVIDIA, you have this area down here on your chart. You're focused as to that area. As this is coming down, you have an alert set, and you go to your 5-minute chart. On this 5-minute chart, I've got the days open and the prior day's close and some trader pivot lines, which I don't look at on stocks, but I do on the futures, because everyone else is looking at it. A lot of people are looking at it or on ETFs. You don't need it on stocks. But the point is, you're down here, you're getting ready, and you see NVIDIA's come down to your reference point, and you start watching the patterns. You start applying bar by bar analysis. Red bar, oh, it's going to go back down and break the low, maybe come back up. No, it's not. It's going sideways. It's forming bottoming tail bars. That bottoming tail bar broke the low. Buy it. Put a stop down here. You didn't get in. I'm looking for a way to get in. This is minor support. Maybe it'll come down there and give me an entry point. Red bar, here we go. It's going to go down there. No, it reverses right back up. A bullish 180. Get back in. Wash, repeat. Over and over. Set up your charts. Set up your foundational concept. And this is what we do in the green room. And if you're an intraday trader, please go take a look at the course that I just created. If you go to mastertrader.com/best course, this is the kind of information that is in that course and a whole lot more. If you have questions, email me, Greg at Mastertrader.